Welcome to part 2 of this custodian update. Interest rates. Two things happening, very interesting. We've got the cash rate remaining static, but they're talking about it going down if unemployment goes up, and we've got the long-term rate that's actually gone up. Why is that? The long-term rate will move depending on the news. So if there's good news, the long-term rate will actually go up, but the cash rate will stay the same depending on the actual finite numbers, inflation and various other things that the Reserve Bank use. I've said to you before, I think we've got till around about September to lock in our long-term rates if we want to lock in our long-term rates. Obviously, they seem to have moved in the last, May, June. They've seemed to have moved up that 0.5% in the last 3 or 4 weeks as there's been some good news come out. But I still think that if unemployment continues to rise, that long-term rates could bump a little bit. And during that bump, you'll get an opportunity. What do I think about it in total? The truth is, if you get a chance to lock in a long-term rate, 3, 5 years or even more, under 7%, the history is you're doing better than the variable rate if you're locking it in under 7%. Because the variable rate will move over the last 10 years and it will average out around 6.7, 6.8, 6.9%. So think about that when you're thinking about locking in. The other real benefit of locking in is if you do lock in your rate, it reduces, or I should say it increases your borrowing capacity. Because if the banks are calculating your borrowing capacity, and let's say the variable rate is 6%, they'll calculate the variable rate maybe at 8 or 9%. So they'll add maybe 2, 2.5 or 3% on that, just in case those rates move to calculate your borrowing capacity. If you've locked in at 6 or 6.5%, they'll actually use that lock-in rate to calculate your borrowing capacity. So there is another reason to lock in your rates as well. What am I doing? I'm locking in my rates. Not all of them, maybe only 50% or 75%. I'm happy with the variable rate. I don't think the variable rate's going to jump too high. However, I am keeping a very close eye on not so much inflation, but on stock of that lower price home, because there is so many people in the market and stock is in very short supply. Let me just touch on that for a second. I mentioned before that the banks haven't got any money to lend for commercial property. Well, it's the same for development. So you're not seeing a lot of development happening today. And what that's doing is the little stock that was available is now basically being soaked up. In areas like Melbourne, you might only have 3 or 4 months supply. Queensland, exactly the same, with not a lot of new stock and product coming on. Add to that the mix of all the first home buyers who have entered the market, and in 1 month alone, I think it was April, 18,500 first home buyers entered the market. Now that is phenomenal. That is really phenomenal. And they're making up a large percentage of that market. Yes, the first home buyers grant was extended to September in full and part in December, but now you've seen the Victorian government who's added their own grant on to go right through to June 2010. So we've got interesting ideas in the mix there of what's available in the first home buyers grant, but certainly it's soaking up all that property in the low end. That leads me to custodian land. I'm really proud to say we filled the custodian land subscription with probably 90% custodian clients. And that is going to be a fantastic project 20 kilometres from the Melbourne CBD in Truganina, in an area where we anticipated selling blocks of land for $145,000, and now there's land selling over the road from us in Willem's Landing, which is literally less than 300-400 metres away, selling for $180,000 to $260,000. I mean, just an amazing increase. Why is that caused? Because of all that shortage of stock in the area, the fact that first home buyers are so prevalent, particularly in the Victorian market, given that the Victorian government have actually increased the grant. So from our perspective, for those of you who invested in the Truganina Syndicate custodian land, you're on a real winner. And we're also looking to get our approvals out sooner rather than we thought, and complete the estate in 2 stages rather than 3. So real exciting times. For those of you who didn't invest in custodian land, by all means keep an eye on the syndicate, because it's a great way of getting to know what we're doing, how we're doing it, and what other options may be available to you from an investment perspective. Let me just finish with you on the philosophy of investing. There's a couple of different philosophies of investing. There's the buy and sell mentality, and there's the buy, hold and build mentality. Unfortunately in Australia, we're so consumed by the buy and sell mentality. It's in the newspapers every day. Is it the best time to buy? Is it the best time to sell? Should I be buying? Should I be selling? When to get into the market? When to get out of the market? Etc., etc. And it creates that amazing anxiety that people think to make money you've got to buy and sell. So therefore they're looking for the best bargain, they're looking for the best buy. You know, is the stock market the right place to go? You know, should I be looking for bargains? Should I be doing this? Should I be doing this? That's one philosophy, but it's not my philosophy. My philosophy is to buy an asset that you want to hold in 10, 15, 20 years' time. The assets I buy are really blocks of land with improvements on the blocks that give me income. I often say I've got the ugliest houses in the street because I don't care about the house. I'm only interested in the block of land. And as the urban growth boundaries are moving, the residential boundaries are pushing out, we know that our land in time will go from urban residential to multi-unit residential, etc., 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 higher density. That's the philosophy of real building wealth, compound growth, to nurture and build and nurture and build. It's not a buy and sell mentality. And I really think that that philosophy is held true, particularly in this financial downturn. Because I get asked a lot, John, how has it affected you? How has this crisis affected you? And what are you doing differently? The answer, it hasn't affected me, and I'm not doing anything differently. Why? Because I'm someone who builds wealth, takes a long-term view and gets compound growth. That's the custodian philosophy. We welcome you to investigate it. Thank you for listening to me.